Bob Diamond, CEO of Atlas Merchant Capital. Good to talk to you once again at the Milken Global Conference.
It's great to talk again. We did this last year.
We did, and this year you have some pretty big news that was announced through Atlas Mara, a big investment in a Rwandan bank.
Wonderfully, it's our second investment in Rwanda, but we announced this morning, you're right, that we have an agreement to acquire the majority over a period of time of a second bank in Rwanda. We also announced that we'll integrate our two banks together and we'll now have the largest number of branches throughout Rwanda, the second highest loan balances. So we are absolutely incredibly pleased that we're able to find a way to be in the very, very top tier, and now we can really drive organic growth. We can really drive the development of our mobile phone technology, and we are just delighted to be even deeper in Rwanda.
Well, congratulations on the deal, and I know the mobile banking is very important to you now, and there's a big push. Tell me how you see that playing out. What is the long-term strategy in terms of penetration in mobile banking?
So the opportunity in Sub-Saharan Africa, Rwanda, is incredible. 85% of the people living in Sub-Saharan Africa have not been in a bank. Larry Summers, who's one of our advisors, often talks about the competitive advantage of being behind. And so what a perfect opportunity for banks in Sub-Saharan Africa to develop and invest in mobile phone banking. We have made the decision to concentrate that investment for one application for all of our banks throughout Sub-Saharan Africa. But we're doing that investment and that technology development in Kigali, in Rwanda, under Kande, who's our chief executive there. If you look at the statistics, they're amazing, but the highest percentage of young people using banks for mobile transfer of funds, receiving funds or sending funds, it's higher in Sub-Saharan Africa than any other region in the world. So we're already beginning to see the impact of technology on the movement of money between individuals, between consumers in Sub-Saharan Africa.
And as you continue to develop your assets in Africa, you had your IPO, successful IPO. What about raising more through private placement?
Well, we did an IPO just over a year ago. Then we followed up last August with a $300 million private placement. We're working on 2 or 3 things now that we have the resources for. But over time, we would expect to raise more capital in the markets as more opportunities come up.
And the deal today on the bank, is this going to be typical of the size of deals you'd like to make going forward?
Well, I think what's typical about it, Rhonda, is this. We think that there's 10 to 12 key markets for us over time. As of today, we're in 7 of those markets. But what's critical for us is that in each and every market that we're in, we want to be in the top 3 or 4 in that country. Rwanda was a country that was very, very much on our priority list. And our first acquisition was terrific, but it didn't give us the positioning we needed. So we had to have a very aggressive organic growth plan or a second acquisition. And in this case, it's pulled together beautifully in a very, very short period of time. Each country we're in, we're going to drive the performance in that country. Make sure that we're either in the top 3 or 4 banks in that country, or quite frankly, make the tough decision to exit. And then over the course of the next 2 to 3 years, we'll begin integrating all of those strong countries now into one integrated Sub-Saharan Africa banking operation. One brand, one technology, one bank.
Are you worried you are going to have to fend off some competition from others who might be looking over your shoulder and decide, listen, this is a huge untapped market, why don't we get in there a little bit more than we are?
Well, there's always going to be competition, and we have competition. We compete with Standard Bank, for example, which is an outstanding institution. We compete with Barclays Africa, which I know well, and
yes,
is another outstanding organization. But it's not as much competition. I mean, one of the opportunities right now is that the European banks, by and large, have been pulling capital out of Africa. So prior to the financial crisis, just over 50% of the trade finance in Sub-Saharan Africa was provided by European banks, and today it's pretty close to 0. We're seeing the global banks really work with the global companies, not on the ground with the domestic African companies. We are seeing the influx of Chinese banks, but they tend to be focused primarily on Chinese companies. So an opportunity to be doing business with African consumers and African small businesses is extraordinary, and I think for us to be in there creating a very disruptive model to get lending to small businesses and get lending to consumers, we actually hope it does cause more competition.
Bob Diamond, great to get an update from you. Thank you so much.
Thank you, Rhonda.